Hi, welcome back to the show. This is Joe Rabil with Rabil Stock Research. So a lot of volatility in the marketplace right now, and I want to do a lesson on volatility, and I want to show you a specific tactic that I use that can really help you, especially if you're interested in swing trading. One of the things that I think is important, and I mentioned in my book, is that you have to understand there are times when swing trading is more advantageous and when it is not. And the environment, it's not necessarily just based on whether the market's in an uptrend or a downtrend. It has to do with volatility, because trends in the going up or trends going down, those can be played in similar fashions, but it's the volatility that you have to watch. So we're going to talk about that a little bit. And I've noticed in all my trading, whether it's intraday or longer term, that the volatility is just as important to keep an eye on as the trends. So let's go ahead and get into this agenda. I want to talk about how we can use volatility to our advantage. Most of the time it's being used as a bad word, volatility, but I want to see if there's ways that you can look at things and maybe take advantage of it. So I am going to discuss average true range and give a quick explanation of that. And then I'm going to talk about why it's more important. The level is a lot less important than the actual trend of the average true range. Then we're going to go through all the stocks requests that came through. So let's do this lesson on volatility now. I have a daily S&P chart up. I've overlaid an 18 MA and a 90, which represents the 18 week, just to get an idea of the trend on both the daily and the weekly. But at the bottom, this is what we want to center our attention on, is the average true range. And I've got a 20 period of the average true range. And for those of you who don't know, the average true range is the reason why they don't call it just the range of the day, meaning the high and low. You're taking the close from yesterday, if there's a gap, and you're adding that in to the range, because that's the true range for the day. This is the low, and this is really what it should be as the high. And because there was a gap, this isn't really the high of the day. It's really where we closed yesterday. So they call that the true range. Now, I'm doing a 20 period moving average of that line. Okay. And what that's telling me is when the volatility is going up, that means that the risk is increasing, and the odds are that there's distribution taking place. But main thing I look at is I'm saying basically risk parameters have increased. So it's part of the thing that I'm looking at in conjunction with the trend. So if I see a situation where this line is moving up and the black line is making higher highs and higher lows above that line, and I know that price is below a declining 18 because I'm on a daily chart. You can do the same thing on the weekly, but if I'm looking at a daily chart, I'm looking at the 18, I'm saying the trend is down on a daily chart because we're below a declining 18 day, and the risk is going up because the volatility is increasing, then I know I can take little pullbacks in this ATR, which is actually little rallies in the market, and use that in my advantage on a swing trading basis. Now, the same thing holds true when this is turned down. So now we have a trend to the downside, meaning volatility is declining. So we went up and tested, and then we turned down, and this line turns down, and we're making lower highs and lower lows here. Look at what price is doing. Price respects the 18, and then we get this pullback. So this was a pullback I really liked. And the reason is that the volatility was in agreement. We were getting a pullback while the volatility is declining. So we had that trade to the upside. And I would use this, if I'm looking at this on a daily chart, I'm using this as a swing trading tool, as another tool that I can use to help in my decision making. Whereas if I'm looking to play a rally or something like this, and this is more of a flat situation, or the trend is flat, we don't have a trend. Like this was rising, but we didn't have any real trend in place here. It was more of a flat line that was not being respected. We don't really have a swing trading play here. But the periods where we've got the line moving in one direction and we get this going in the opposite direction and we get a trade. That's a trade. That's a swing trade we can be on the lookout for. So it's just another little piece of evidence to be on the watch for while it's happening. Now, if you notice what's taking place now, we're actually turning this. It's starting to turn to the upside and we just failed at the 18 again. So this was very abrupt in the way that it played out. been very difficult to try and take advantage of it, especially because this really wasn't trending yet. But when it's in transition, that's telling us something too. You got to be really careful about trying to be long. So if you're trying to take long trades on a swing trading basis, when the volatility is working against you now, you got to be very careful. So this is just another little piece of information, another tool in your arsenal. And, just looking for periods where we have a declining 18 and a rising 18 ATR line, right? The average true range is going up while price is going down. We can look to play shorts in this situation. So this is a swing trading tool. It's not 100%. Don't get me wrong. It's not like it's going to give you a perfect signal every single time, but on balance, it's going to get you thinking in the right direction. Periods where we're pulling back. And if you notice, so just make this one last point. So we have this move going up to the upside. This was actually a pretty decent signal because you notice we were still below a declining line. But from this point on, the volatility really was a little too high. We were breaking above the line and the line was starting to flatten a little bit. So it would have been a little bit tougher from a swing trading standpoint. And what I'm always telling guys, if you're going to swing trade, try and pick out the premium times. Play the premium times and your swing trading is going to go through the roof. You won't have an equity line that goes up and then goes down and like this goes down. Try and play and take advantage of the times when they're really solid periods, whether they're up or down. And this can help in that endeavor. All right, let's go ahead and get into the stocks now. Just briefly, my services can be found at rabilstockresearch.com. The individual package has 2 to 3 reports each week plus a video. If you have an interest in giving it a try, you can use a coupon code StockTalk and get the first 2 months for $50. Let's start looking at the individual stocks now. Very excited to be presenting at ChartCon this year in October 7th and 8th. I'm going to do a presentation on technology and what I'm thinking there, as well as I'm going to be on one of the panels. So feel free to check it out. It's at stockcharts.com/ChartCon. Okay, let's get into the market to start. I'm going to use the S&P, and I like to go through this at least every couple of weeks, especially right now on the show, just because of the changes that are taking place and the huge volatility, obviously. One of the things that's happened recently that I think is really important is we're currently below a declining 18-month line, and we're below a declining 18-week line. Okay, so both those lines are down and price is below both of them. Now, there's a key level to keep an eye on, and that is the 4,000 mark, because if we get back above 4,000, this 18 months starts to be more like a flat line, not really down. Until we close the month. If we can close the month below 4,000, then we'll have this turn down. But right now, it's kind of teetering depending on whether we're above 4,000 or below. And the other thing is that the 4,000 is the mark that determines whether we're above or below the 18-week line. So really, really key number to keep an eye on for now. But here's what I'll tell you. We're flickering back and forth above that line. But what we're not flickering on is this downtrend line. And I'm from the East Coast, so I would call this I-95 south, okay? Anything to the south of this trend line is a big negative. I mean, we're talking, go back and look. I'm not going to take the time right now, but go back and look at the times where the 18-month we were below a declining 18-month and below a declining 18-week. And it is not pretty, okay? There are only a couple times really in the last 20 years where you can say that was the case. So as long as that is the case, you have to be pretty defensive, in my opinion. We have this 3,900 area that everyone's talking about, but for me, I think it's really has to do more with staying. If we stay below 4,000, then there's a lot of risk out there. I already showed you how the volatility has been going up a little bit. If we break 3,900, then there's a pretty good chance we are going to come down and test these lows. But My big thing right now is the 18-month line is turned down at this level, and we're below an 18-week. Now, a lot of times people are asking me, why do I use an 18 versus a 20? I mean, you can use the 20. The reason why I use an 18 is because of the slope. I like the fact that the slope shifts a little bit more quickly. Right now, the 20 MA, I haven't looked at it, but I'm assuming that's still rising. So I just like having a little bit more sensitivity to the slope. It gives me a slightly bigger edge. Okay. All right. Let's go and look at the first stock request. So Tesla. Obviously at a key level. Now, one of the things I want to point out here is that we have this pinch play developed on the weekly chart where the 18 is starting to cup around. We came down and tested, and we have a zero line reversal. I mean, these are positives, right? So you could construe based on just looking at MACD that we've got something developing here. But the problem we've got is low ADX on a daily chart and low ADX on a weekly chart. And when that happens, I shift my thinking to breakout. I want to see this breakout above this resistance zone up here, somewhere around 313, 314, something like that. I think if we can get through that, then I might consider this for a trading play. There's a little bit too much resistance on the monthly chart to expect this to just take off, but I could see this getting a little bit of a burst if it can get through this resistance zone. So that's kind of how I'd play it, but it's the reason why I'm not out saying, okay, we've got a zero line reversal here and a pinch play here, let's buy. I'm waiting for a breakout when we have low ADX. Okay, Kroger, KR. So, I mean, I kind of like what this is doing. I mean, I really do. I think this is pulling back on the monthly chart. We've still got a nice trend to the upside. There's pretty good momentum conditions on the monthly. I don't see a lot of selling pressure to the downside. What's missing is it's not quite ready. When it crossed the 18 was still declining. And as I say on the show all the time, when that happens, I'm looking for a test and I want this to cup around. So that's really what we need to take place here. And if that doesn't happen and it just keeps dropping, then there's no trade, or it forms more of like a double top pattern where you have to come back through this prior high. So watch and see how this reacts. Right now, this is not having a good week. If it comes down a little bit more and tests this low, then we have to take out this high. If it can cup around and hold the 18 and have that cup around, then it would be a little bit more interesting to me. Firstenergy. So just looking at this decline had a major impact on what was going on because we had a rising 18-month we were pulling back to. Yeah, we had some resistance here, but I really felt like if we had an orderly pullback here, I'd probably been willing to play this. The overall pattern looked pretty good, but this was too strong to the downside. And what it did was create resistance here. So we had resistance up here, but now we have resistance here. So I can see based on that selling pressure, it's going to have a hard time getting through that at least right away. So yeah, maybe it gets a little bit of a trading move. I think you'd have to be pretty nimble to make money in this right now. I think it needs more time just based on the violence of the pullback. Progressive. So I think the easiest way to show you my thought process on this, because it's got good momentum characteristics on the weekly, it's got good momentum characteristics on the monthly, but I can draw in this upper channel line and look at this. We've been hitting it 4 or 5 times now, and we're hitting it again. Is it possible it could get through that? I mean, it's possible. I just don't think it's all that likely. So I would be more inclined to be looking at the oversold area, which is closer to the 18-month line. That's really where I think you get a premium wholesale entry rather than this right now is more of a retail entry. I want a wholesale entry on a pullback, and that's what I would be looking for on this. Nothing wrong with this. If I'm in this, I'd probably stick with it, but I don't want to buy it at this level. So TJX, because of the decline that took place this year during this bear market phase, we have turned the 18-month flat. Now, it hasn't turned down, and we have kind of poked through it here recently. So I would put this more in a neutral camp. It's probably in a trading range environment. We're right now above the 18-week, and it's rising, and a little bit of improvement in the MACD. So, I mean, yeah, it's possible we could be okay here. at least in the short term. But I don't know that there's anything to do with this. I mean, I don't see a potential trading play because the resistance is not that far away. We're probably into the low 70s, and then there's problems. So I have a hard time seeing how to make this work right now, unless I want to go down on the shorter term time frame. And it just looks to me like 70 is the level you have to get through. So if I break 70, I just don't have that much room before I get into the really big resistance problems. And that again is based on what's taking place in the 18-month line. Now, one thing I'll say here, this is really impressive what this relative strength line is doing. So what I would tell you is that as this gets through 70, we might want to reevaluate everything and see what this looks like. Is this 18-month flattening out? Are we getting a zero line, a reverse divergence pattern off this monthly? And is this setting up a little bit more strongly? We're getting better, this action better down here on the ADX. I mean, all those could be taking place, and I'm kind of keying on this relative strength line. It's keeping me interested, but 70 is just a big bogey here. If we can't get through 70, there's just nothing to do. Buckle. So Buckle has come down to a pretty big support level. Big, strong support level here. I don't think there's a significant amount of downside. You know, my problem is, you know, we've got this 18-month that's now down. So I know I've got kind of capped out here up around 37, 38, and I'm at 33 and a half. So I don't know how much room there is to make money right now. And the other thing I'll tell you is that we've done the one, right? We've broken the downtrend line, but we haven't tested this low. We don't have a good test of this low yet. I'd like to see this come down to 30 or something like that, form a higher bottom, and then if it can come back up through here, I think it would be a lot more interesting, and maybe by that point we can work our way back through the 18-month. I just think it's going to be really tough for this one, again, unless you're really nimble, and I don't really see a short-term pattern developing right now. So Enphase is a great stock, okay? A part of a great industry group right now, the solar stocks, which I think are trading exceptionally well for high volatility stocks in a market that's not very good. The problem I've got is, you know, in this one in particular is the risk reward right now. That's the real issue. It's not that this isn't a good pattern. And I guess if you wanted to try and trade this, you could do that. I mean, this is not a bad looking pattern. It has very strong ADX characteristics. I mean, it looks like it wants to go. My real problem is a stock like this going to go up as long as the market stays below 4,000 or if it breaks 3,900. I think stocks like this have some risk in them. So just be careful if you're going to do this. I would play smaller size, and I'd also use pretty tight risk parameters right now. Okay, BLFS. So massive decline phase, huge decline phase, breaks the 18-month and turns it down. And we can see on the weekly that we've kind of switched things. We've gotten back above the 18-week and it's rising. The problem again is that we broke the downtrend line, but we don't have a test of the low, and we're back up to the zero line on MACD, and we don't really have that much strength on a weekly ADX basis yet. Short term, yeah, we've been showing some pretty good strength at this point. Is there a trading move up to 30? I mean, there's very possibly a trading move up through 30, especially if the market can get back up through 4,000. Yeah, I think there could be some potential there. But, you know, again, be really nimble on this type of pattern until we get better structural action based on the bigger picture. I want to see a better test here and have this kind of hold and cup around, and then I could get a little bit more interested for a bigger play. MPLX, I think this is holding up pretty well. We can see what's taken place on the monthly chart because we had this big undercut and we rallied back up, and now we're testing the 18-month line, and it's just kind of working sideways here. And the same thing's holding true on the weekly. We're below, we've got a low ADX condition in place. We're trying to get things going. I personally would like to see this get through this level here around probably closer to 34. If we can get through that, then that improves chances that this is really trying to break out here. The fact that we held the 18-month, I think we have to respect that. The fact that this is in the energy area, I think we have to respect that. I mean, energy has a pretty good chance of continuing to trend here if it can hold it together during this, near term period while the market's still in question. But a lot of energy stocks are looking pretty interesting still. Speaking of that, I think CVE looks really interesting. I just think it's a little early. We had this really harsh decline, and we're rallying back up to the midpoint of this decline. You see how we just retraced about half, and we have the 18 kind of rolling over a little bit. So I would prefer to see something like this develop where we make a double bottom and then come back up through this double top. But it could play out another way. If there's strength right now and we push up through, we could be looking at this kind of an entry where we break out and then pull back and test this level. So we got to be open for either one of those possibilities. I don't think I would just buy a breakout right now. I mean, I see what's going on. We have a low ADX pattern here. I mean, you could do it. But here's the way I would do that. If you're going to buy the breakout at 20, you have to give it weekly risk. I tell my subscribers, use weekly risk on a weekly trade and daily risk on a daily trade using the ATR. But in this case, even if I bought the daily breakout, I would still give it weekly risk because I just think there's some risk in here in the short term of this backing off one more time. Okay, let's look at SPGI. So this is one of those stocks that has got me a little worried. You got the failure at the 18-month. I mean, that hasn't happened. Look at how it got down below, but it didn't fail at it. We held it, and now we broke it, and now we're failing at it, okay? So a lot of risk right now, especially as this stays below the 18-week. The other thing that's bugging me is this looked like a potential pinch play, but now it's starting to look like a potential zero line reversal to the downside where we're rallying up and then failing at the zero line. So as long as we're below the 18-week, there is a no trade here. If we break 350, then there's probably risk of this coming down to test support at 325. STAA. So this is one of those stocks where if I wanted to play for a shorter term trade, and we can get that S&P back over 4,000, then I would actually consider playing this weekly daily because I do like the setup here. This is a pinch play developing on the weekly chart. And a pinch play is when the MACD kind of pinches in towards the signal line, which is trending, and it's happening right after the zero line cross. Okay, and we're getting a pullback in price. So a 2 to 3 to 4 bar pullback in price while this pinches in. If we can take out the highs here, pretty much getting through 100, we'll also have a zero line reversal pattern with low ADX on the daily chart. So this is using two time frames together to give me a very similar pattern entry right around 100. The problem I've got with this is we do have resistance up here, and we spiked on the monthly chart up a little bit above 100. So we have to be a little careful here. Again, it would probably be one I would play with smaller size, but I would give this a chance, I think, because we have a zero line reversal developing on the monthly chart. So enough good going on here that I would consider watching this. Just make sure we can get through 100. Ingersoll Rand is more of a neutral pattern. We've got this 18-month that's flat. We tried to get through it. It's not like it failed at it, and we got a pretty good bounce off the 18-month. We had pretty good momentum characteristics on this move to the upside. I think this stock can defend itself down here. I just don't know that it's ready to really take off to the upside. There's pretty good resistance up there in the mid-50s. So I would just kind of classify this as a neutral pattern right now. I need a little bit more evidence, and I'd probably make this push higher and then buy the next pullback is probably the way I would play it. Now, Clean Harbors is interesting because we've got a lot of good-looking stocks in the waste management area. WM, RSG are the bigger cap names. This one looks very similar. I'd like to see this form a higher pivot low right in here. Come back and test this little zone here, come down and prove itself there. And actually it would end up forming a pinch. And look at the strength of the ADX. Look at the strength of the ADX here. But by letting this pull back a little bit, we could get this MACD on the daily chart a little bit closer to the zero line. And then we'd have the pinch play and the zero line reversal forming at the same time. But I do like this. This is definitely one to keep a close eye on for sure. Okay, so Factset, I am pretty impressed with this because look at this trend. I mean, we start comparing this to the market. This is impressive. We're making higher highs and higher lows on a monthly chart. We've got 18 and 40 rising at about the same rate. We've got confirmation of ADX on the last move to the upside. So I'm pretty impressed with that. The pullback wasn't all that bad because we go through an ABC decline and ADX could barely get to 25. All right. Now we had overrun on the downside here, but look, we're back above the zero line in MACD. I still think this would be better to come back a little bit closer to the 18-week line, but I think we have to respect what's going on here. There's a lot of improvement. What this has done for itself is the market could break down and sell off, like I'm talking about, as there's risks there, and this stock could sell off, but be well above the key support level, which I actually think is 400 in this case. The 18-month is right around 404. I mean, I think somewhere around 400 is kind of the key to the longer term trend in this, which this could survive even in a big onslaught in the market to the downside. So this is a stock I want to keep on my watch list. It's just not one I want to buy right this second. Thanks for watching the show. My research can be found at rabilstockresearch.com. If you have a stock request, send it to stocktalk@stockcharts.com. Have a great week, and we'll see you next time.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.